Hello there, everyone, and welcome to this very special presentation titled Hot Stocks for a Focused Market. My name is Steve Chappell, the Director of Trading Systems Development here at VectorVest, and boy, I'm thrilled to announce that our Tampa Two-Day Investment Seminar, boy, it was a good one, wasn't it? Overwhelming success. One of the highlights or standouts from the show was our hot stock portfolio, which really is a super system for aggressive investors and traders or people who want to take out a slice of capital and invest more aggressively. And boy, I tell you, it's quickly becoming one of our top solutions for navigating a focused market condition. And so focused meaning a small number of stocks are really the participants, right? They're the ones that are delivering the strong results. And so I'm delighted to announce that we have a brand new derivation of that system that is now easier than ever to follow. Anyone who is a VectorVest subscriber can follow this. And so let me show you around because I think it's really something that can have a strong impact on your results. So it's as easy as 1, 2, 3. We're going to be buying 10 stocks on a confirmed up call from our hot stocks search. And so we hopefully are just days away from the next confirmed up. We'll see how the markets go from here, but so far pretty good surge up off the lows. Once we fill out that basket of 10 stocks so that we are nicely diversified with our capital, then what we're going to do is deploy a 99% gain off the purchase price or a 20% loss off the purchase price and only replace in a C-up condition. So if we switch into a confirmed down, you're still going to have the stop losses intact. But if we sell something at a gain or a loss during that time, we will not replace it. And so when you get to the next confirmed up signal, step number 3, you go back to step number 1. And that's selling all of the positions that we have remaining and then reloading on what should be the new focus for the market at that next confirmed up. So you replenish with 10 new positions. So you can see there's going to be some turnover, which is one of the reasons why this is a more aggressive system. Also, we're going to be holding through some confirmed down conditions. Now, as long as the market continues to remain in this case for a bull market scenario, we've actually seen this to be quite beneficial, believe it or not. And even the loose nature of the stops have also been beneficial in smoothing out drawdowns through those confirmed downs, which might take a little bit to get your head around. You might think tight stop losses would be the way to go, but given these guys that are showing a lot of strength, that wiggle room has really been the best way to go. All right, so what we're going to do, let me show you around. Let's get right into VectorVest here quick. And so here we are at the homepage. Boy, I tell you, market's still trying to go up yet again. So yeah, nice push off the lows. All right, so let's first address what I think might be the most important part is trying to get your head around this idea of a focusing market. So what I'm going to do is start out in the market timing graph. I'm going to go up to the timing tab. From there, market timing graph. And what I'm going to do is really highlight just the buy-sell ratio in and of itself. And when we look at a lot of data, let's just go to a 10-year, for example. If the buy-to-sell ratio is tracking the number of buys compared to the number of sells, the phenomenon that you're going to see happen time and time again is a cycle where there's some kind of catalyst, whether it be huge government stimulus, massive earnings surprise like Citigroup, back in 2009, whatever that catalyst might be, you have this massive surge where the market really broadens out and almost all stocks, it seems, in the stock market are participating in a rally. So you can see the buy-sell ratio gets up north of 10 buys to every sell under those kinds of conditions. And then you might get another round of stimulus, and boom, it just reignites the thing again. But eventually, after these catalysts are long absent from the market, then the market has a tougher and tougher time seeing that kind of broadening, that kind of participation. And often it leads to fewer and fewer and fewer stocks until the market has a full reset. So this type of strategy here is really high momentum. You're going to see that in a minute with the search itself. So it's going to excel the further removed we get actually, from those blast off conditions where the whole market is rallying. That's where Buffett's got it right, where what you want to do is really buy up all that blood, because the bloodiest ones are the ones that run the furthest and the strongest, right? Whereas when we're so removed from that, like where we are today, really, and I think you've seen it and felt it in your own portfolios, right? It seems like maybe 1 or 2 or 3 stocks in your portfolio right now are really carrying the ball, across the finish line. So in those kinds of situations, a search to keep in the back of your mind to make sure that you're continuing to follow on what the market is focusing on now would be these hot stocks, because it's not NVIDIA as it was over the past couple of years. NVIDIA's earnings is, still massively strong, right? But really kind of decelerating at a pretty good clip as well. And so prices have become more stagnant there, right? And so what we need to do is have a way to find, what are the stocks that are persistently pushing up the page right now? What is the market focusing on if fewer stocks are even able to achieve a buy recommendation, right? So before we get to the stocks, just quickly, I want to recover some of those rules. So I'm just going to zoom in just to the most recent time frames here. And this is a weekly chart, so just keep that in mind. This is many weeks, but when we get a C-up, that's the time at which you would launch the campaign. So since we are shy of a C-up right now, my suggestion would be to wait for the next C-up to start to follow something like this, or potentially even trade, right? But what we do is we buy 10 hot stocks here. We then deploy those stop losses, the 99 gain or the 20 loss, and they just rule the roost even through the next confirmed down, which fortunately here have been on the shorter side of things, although this one was several weeks, you could see right there. We continue to manage risk with those stop losses. And if we're putting equivalent dollars into every position, that 20% really should account to no more than 2% of your overall portfolio value on any single trade. But if you were to take full loss on everything, of course, that could go as deep as 20%, although we haven't seen that. So the thing to be careful of is if we were ever to see the earnings trend indicator really dip over and start to come down, we comment on that every week in our color guard reports and in the VectorVest views. If the earnings trend begins to really lose steam, I would certainly begin then to come off the gas here, because it might have a little bit higher risk, under that condition. In fact, it will have. Okay, so the good news is that's not the case for now. We'll see how the rest of this earnings season goes and what the Fed does here next week. That might even alleviate the backdrop a little bit, depending on, the verbiage that he uses. So anyway, hopefully you get the grasp of this. Now, when we get to this next confirmed up, we would sell anything that remains, whether that's still the 10 stocks we started with, or maybe you're down to 3 stocks, whatever that case might be, you would sell those 3 or those 10, however many are there, and then you would buy 10 more, because the idea here is market conditions have changed now over the last several months, typically, and the market is now focusing on something different, or could be focusing on the very same ones. But we want to make sure that we get that fresh batch of 10 that the market is still focused on. All right, so that's how it works. So we buy 10, we hold them as long as possible, and that's the maximum up to the next confirmed up call where we would rebalance. Start with a fresh 10. Okay? All right, groovy. So let me get out of here and let's go over into Unisearch. And here's the search that we'll use. It's in the cherry picking folder. It's called Hot Stocks. Stocks need to be less than $100, have at least some really decent volume, 250,000. So I like that attribute. Recommendation has to be a buy when we buy them. Also very nice to have. There has to be at least a positive price change on the day we purchase or from the prior day. Okay, so there's still some upward one-day momentum there. And you can see also trending over the last couple of weeks higher, which is good. Comfort index, meaning price persistence, has to be at least favorable, but also has to be greater than it was 4 weeks ago or a month ago. So that comfort, the price growth persistence, is improving. over the last month. Also, price has to be at a new high over the last 5 weeks. So that also is then going to give you assured momentum here over the last 5-week period. Can't be less than $1. Can't be on any crazy exchanges like bulletin boards, or we're also going to get rid of indexes and things like that. And it can't be a Contra ETF. Okay, so that's never going to be a problem. Now, here's what you get on a current basis. And actually, even in the Jockey Club, we hold a couple of these things, I think, right now. At least Hood, I know for sure. But let me show you what these look like. They're sorted. So this is like shuffling a deck of cards, right? Your objective when you're playing poker is to get a really good hand. And boy, if you got some good sleight of hand and stuff, but some of those gals can do that, right? But here in the stock market, we're just trying to ensure that we get, in this case with RT times CI, essentially the fastest steady climbers. I mean, if I had to put it in just a few words, it's the fastest steady climbers. The best overall of those two conditions, okay? Sometimes things might look a little bit, volatile, but for the most part, look what you get. Let's graph them up. And yeah, we've been in Robinhood here for a little while, and boy, as it broke out is when we got in. But it's still finding it today, and rightly so. This is a hot stock. This is a stock that the market is focusing on. Nice thing about Hood is it participates in the Bitcoin space, but also has a pretty broad spectrum of accommodations that it makes. But certainly just a good overall brokerage. Lots of the younger folks strongly attracted to them based on design of the app and everything like that. And so, you've got a lot of nice attributes and participation with Bitcoin all wrapped into one, which makes it pretty steady. And so it's just a great little stock that's really been on a tear. And stocks like this, even if they pull back, this is the kind of stock based on the earnings we see down here below and everything, probably going to work its way back up the page again. That's the whole idea. Go with what's hot, right? SEI, really picking up some speed, okay? And boy, we got more stuff on here than we need. Let's just even go to a simple graph is fine, okay? Really outpacing its stop price, which is great. RTs remaining elevated. This is why you don't sell high relative timing stocks. I try to drive this point home at seminars all the time. So folks say, well, if it gets to 1.9, I should sell it, right? No, I think you should hang on to it as long as you can, because if it stays at 1.9 for many months like this one did, look where the price has gone. It's doubled, more than doubled. So you can't sell stocks. These are the kind of stocks you want to own, not sell. They're going up. They're doing what you want them to do. You say, well, I don't want to buy it here. It's at a new high, and look how far it's gone. You would have said the same thing back here, my friends. You'd have said the same thing back here, right? So it's doing what you want it to do. And if you're aggressive and you want to find out what the market's focused on and go with that, this is the strategy for you, okay? And so you can just keep going down through. Boy, this one's really exploding. Blast off gap. This is a breakaway gap when you gap through prior swing high resistance. Also very bullish. So, these are stocks that are doing something. They're on the move. We've traded this one in the Jockey Club a couple times, and so I think you get the picture. They're stocks that are really, really moving up the page, and they're things that folks are focused on. Fintech has become a super hot space. Anything Bitcoin related obviously has been a super hot space. So that's what this search is focusing on right now. Along with infrastructure, that makes sense under the new administration, right? So really cool thing is just running this search. So that when we wrap that into a complete system, here's what you get. Okay, so I'm going to find the system, super simple, guys. All you're going to do is come right over here to the Viewers tab. In the Viewers tab, just go to Trading System Viewer. It's going to be right at the top. So we have one here, Hot Stock Portfolio, no Contras. That one uses Profit Locker Pro. Got a new one in there for you that everybody can follow, even if you don't have any of our plug-in, the benefits of those plug-in modules, by the way. Over the longer term, Profit Locker Pro has held up a whole heck of a lot better. But, I hate it when people say, well, the strategy and trading system he's talking about right now didn't work 20 years ago or 12 years ago or 8 years ago or 6 years ago. Who cares? What I care about is what's working now. So anyway, let me get off my soapbox here a little bit. But this is aggressive, so this needs to be aggressive money. If you're a prudent investor, you want to slice off 10, 20% of your capital and do something like this. Even if you're prudent, that this could be a good way to go, just to try to grow that a little bit quicker and not take on exorbitant risk, right? Or if you know it, hopefully you feel it in your bones. I'm aggressive. I'm willing to take some risk here. I'm willing to stomach a 15% drawdown, 20% drawdown at times, or even maybe a bit more. Then this could be all that you do. So as we go across here, it's aggressive. We are using confirmed calls, and you can see, boy, over the last month, 3 months, and 1 year, hard to beat. Now I can't guarantee that's going to be your performance for the next 1 month, 3 months, or even 1 year, right? But if we get fractions of that, we'll be in pretty good shape. You know what? Spark chart looks as good as anything possibly could be right now, and you can see, hopefully, it's kind of granular, but it's even steadier, this new one, than the older one right now. I did some longer testing, just to look at it. I will say that is a current phenomenon. But if you think about it, it ties into what I said earlier, because what I did here was loosen the stops even a little bit more in reality. And as the market has become more and more focused, it's allowing those focused stocks to continue to be at play for as long as possible. Okay. If we come across here a little bit further to the right, you can see your annualized figures, your drawdown. You can see over the last year that's improved here as well. I pointed that out on the Spark chart. Okay, so all that being the best part for some, no add-ons, so it's good stuff. Now, what can we do with this? We can do a few things just to, look at what's going on. We can click on Trading System Details. When I do that, it'll take me out to a web page in your browser. You can see all the history here. So we started this most recently. You can see the 1 month, 3 month, 6 month now. Year to date, it's up 9.6 this year. It's a pretty cool thing to know. Drawdown's only 2% for the year so far. You can see the 1 year, and eventually there'll be a 3 year, your all-time winning trade percentage is at 63% right now over the last year, and that's on 66 trades. So that's representative of enough trades to be meaningful, okay? If we come down here to the bottom, you can see the current holdings. You can even sort by something like ROI. You can see we're getting close to maybe full profit potential on Credo Tech at this point. And here's a shining example of what I'm talking about. Credo Tech is probably a stock that flew under a lot of people's radar, but it is really flying, and it's up 85% in this portfolio. Celestica is hopefully a stock a lot of folks know about, but this system was smart enough to pick up on it and has really done well. Foreign banks have been on a tear. Hopefully you've been tuning into VectorVest, because we've certainly made you aware of that phenomenon. I know I do in the Jockey Club just about every week here lately, it seems. United Airlines, some of the airlines, and even the cruise lines, have had a pretty good last year or so. So, and the hits keep going. Now, down here at the bottom, at this point, the market's lifting up in that C-down situation. So you can see we don't have 10 stocks anymore. We have 1, 2, 3, 4, 5, 6, 7. So we've sold 3, either at a gain or a loss during this confirmed down that we're in, okay? So hopefully this puts you a little bit at ease, knowing it sounds a little treacherous, maybe more than it should, when you're holding stocks through a down. We all know, including me, that even the best stocks get hit in downs, and sometimes the best ones get hit even more than the worst ones, because the worst ones never got going, So we get all that. But until you get into a situation where we start teetering on a bear market scenario, I really feel like it's not going to be quite as treacherous as you believe. All right. So given all that, we come up here to the top right. We go to Trading System Rules, and we'll pull that open. You can see we're using confirmed ups and confirmed downs. In the downs, we're taking no action. So we're not replacing anything that we sell at the gain or the loss. Okay. That's why we only had 7 in there right now. And but the stops are working. And then when we come over here, we see that we've got the hot stock search, 99 gain, 20 loss. Okay. And then we also see we're trying to maintain 10 positions. So we are replacing in the ups, not in the downs, only in the ups. And everything else is pretty much just standard default settings. we're staying evenly dollar weighted, investing at the average on a forward basis. So if you're doing $100,000, you're up 20%. The next stock you buy is going to be at $12,000, not 10 that you would have started with 10 positions, 100,000. Right? So that way you kind of keep diversifying and spreading your risk effectively. All right, so that's really as far as I think I need to take that. Then you can come back in here, you can paper trade it for a little while. Seeing is believing, right? So you can come in here, you can paper trade the portfolio. You can start empty. That's what I would encourage to do if this is something you want to go ahead and give a shot. Or you can just follow it for a little while and even follow it, with real dollars later if you wanted to go that way. That sometimes can be a great option for a system like this if you feel like it's going to be quite a while before you get the next market timing signal. So anyway, if I click on this one and open the portfolio now, it'll take me right into portfolios. See, it's down a little bit today. It's up 131% since launch. Okay. I can again see all the positions that are in there. Here's your Credo Tech, your B-Bar, your Celestica, your United Airlines. And you can see some of them are up pretty nicely today. Okay. All right. So all that being said, what I'm going to do here next, go back to Trading System Viewer. And we could also go this way. We could just wait for the next signal and follow it from there, right? So I can start with an empty portfolio. And I'm just going to call this Fresh Start. Oops. Caps lock. That's funny. All right. I like to have a little humor in here anyway. Hot Stocks Portfolio Fresh Start. Okay. You can even match up your brokerage. Maybe some of you are paying no commissions. Let me know who you are. Just kidding. Let's say it's 1. Okay. Just put that in there. And we can open portfolio now. And then on the future, it'll tell you what stocks are in here and, based on whatever dollar amount you put in, exactly how many shares to buy, all that kind of stuff. We can see that the Genius is currently in a down. So right now, automation is going. It is enabled, but we don't have anything to do because we don't buy the 10 stocks to start until the next C-up call. So hopefully I've inspired some folks here a little bit. This could be something that you can do with a small denomination of capital, even if you're more on the prudent side of things, which is something I like to do. Or, you can make this all that you do if you truly are an aggressive. You need to be aggressive. You need to be ready to be able to stomach some ups and downs and some prolonged periods of, not doing as well as you might hope, right? But when this thing really moves, man, it moves, so that's the give and the take, right? With an aggressive system. When it moves, it really moves. And that's both directions sometimes, so just be ready for that. And if you are, I think this is truly a system that can move the needle for you for as long as we remain focused here and there's not some kind of stimulus or massive earnings surprise season or something, that really begins to broaden this market out again. So one way to know if that buy-sell ratio starts really cooking above 1 and rising quickly, the market is certainly broadening out at that time. And then, Chappell's champs, in my case, things like that, I'll start gravitating certainly a lot more back in that direction. Not that I totally left it, So, but that's how it goes, guys. All right. Hopefully that's clear, crystal clear. And we'll see you next time. Pretty simple one this week. Okay. Thanks for tuning in. We'll see you next time right here at VectorVest University. See you then.